Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, May 8th, 5:38 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, large cap uptrend, mid caps and small caps continue to underperform. We're avoiding, like the plague, KRE, which is regional banks and commercial real estate that might be associated with it. Check over here at the trend gauge, leadership neutral with an underlying bias toward bullish. Leaders acting very well last week and starting off this week. Short term, we're neutral. We've got the large cap indexes above the short term 21-day moving average. We've got mid cap and small cap. Tried to break above it today, but failed, and that's been the MO for mid and small cap stocks. Medium term, same situation. Large caps above their 50-day moving average, mid and small below. And stop me if you've heard this before, long-term 200-day moving average. Large cap indexes above and below. We've got mid caps and small caps. So what happened today? After a nice strong move up on Friday, what you prefer to get if you're a bull the next day is some digestion time, and that's what we got. Nice tight consolidation, less than a 0.5% range on the S&P 500. Mixed close, however, because KRE, as I said, continues to be weak. KRE being uh, the index for regional banks, and all in all, a good day. I'd say it's a win for the bulls. Last thing you want to see after a strong move up like we saw Friday is a big give back and reversal, and we did not see that. So if you're a bull, you got to be happy. Here are the numbers. RG7, this is our 7 ETF growth composite, fractionally higher. S&P uh, basically closed near where it opened, up about 0.1%. NASDAQ 100 started weakest of the indexes, finished the strongest. That's where the money's flowing. Big cap tech up 0.25%. Dow down 0.2. Mid caps down 0.3. Russell 2000 small caps down 0.3. Global 60/40 down 0.12. Bonds weak across the board today, dragged that index down. In-house GROTECTION, our leaders continue to do their job, up 0.22% on the day. We'll take a look at charts of interest and the tail of the tape. Let's dive right into it. We'll start, as we always do, with the chart of the S&P 500. So you can see the last Wednesday and Thursday were bearish days, negative reversal on the Fed, gap down the next day. Apple reported after the close on Thursday, and I guess Apple's more important than anything that the Fed could say. We had a gap up, it closed at the high of the day. Very nice day, nice tight range consolidation near the top of Friday's range. That's just what bulls want to see. Now we want to set our sights on 4,200. The high of last week before we reversed on May 1st was 41.87. So those are the two targets. We're at 41.38. So 41.87, 41.95. We've got some tough resistance and key Fibonacci levels to chew through before we get there. But if we do get above 4,200, there's not a lot of resistance after that. That would be a big win for the bulls. Let's go to the NASDAQ 100, which has been the strongest. You can see making new highs, new recovery highs, pulled back and tested this 321.63 level. Closed at the high of the day, started the weakest, ended the strongest of the 5 major indexes. Nothing to complain about there. Dow Jones Industrial Average hanging on tightly to its 8 and 21 EMA. Again, tight consolidation near the top of Friday's range. Can't complain about that either. Now, mid caps, we can start our complaints now. The airing of grievances just from Festivus. Try to get above the 200-day moving average, and the 21-day moving average failed miserably. Small caps, try to get above the 21. In fact, made a higher high versus Friday, couldn't hang there. And the culprit, let's take a look at it. KRE ran into the declining 8 EMA and reversed off of it. It's even worse if you take a look at a 5-minute chart here, because we started off with a gap up. And anytime you make the high of the day within the first 5 minutes, you're not having a good day. just selling off. Uh, any opportunity to get out of regional banks is what it looks like happen, especially when you see here into the close the way we just faded while the big cap indexes were going sideways with a higher bias. You can see the spikes here on KRE. Tells me that under the underlying sale of the banks that comprise the index. I took a look at it. It was blood red today, except for a handful. After it started selling off at the open, uh, the market is a shoot first, ask questions later market, and that until you're guilty till proven innocent. Uh, if I might mix my cliches together there on regional banks, stay away. Let's go to the dollar, UUP. Started off weak today, got progressively stronger as the day went along. How did that carry over to the indexes? Or I'm sorry, the precious metals mixed. Here's GLD, closed near the bottom of its range as the dollar closed near the top of its range. Uh, Not bad though. All things considered, where are we in the pattern? Holding the 21-day moving average. Need to hold that low of Friday's gap down in gold is critical. GDX gold stocks down just slightly on the day. Let's take a look at the 5-minute chart here. Uh, Got off to they recovered quickly from the failed gap up, but then just bled all throughout the day. But still holding their 80 MA tight range after a big 3-day move in the middle of last week. Silver SLV down 0.3% tight range on the day. Let's flip to the VIX. VIX, recall, only spent 1 day above the 20. That was people were talking about the possible volatility event, but Apple put that to bed, and the reaction across the board after Apple, back below the 50, back below the 21. This is where we want the VIX, and 1.04% now is the range on the S&P 500. That's its average true range. It was over 2.5% during the bear market. Lower volatility makes for a stronger market, no question about that. Let's move along to bonds. Bonds were weak all day, which means rates were rising for the third straight day. Broad bond index down 0.5%. TLT big cap up or down 1.14%, down near the bottom of its range. When it gets at the bottom of the range, it's been bouncing. We'll see if that continues. Let's go to the 30-year yield up 2% at the top of its range. What's been happening over the last 2 months is at the top of the range, we've been selling off, so we could break out. We tried to here and failed, then established this lower range, which we've been trading in for the last 8 weeks. How about the 10-year yield? Nowhere near this failed breakout, much lower, not quite to the top of its range also. Bitcoin now, some news today. Binance ceased redemptions. That's not good when a crypto exchange ceases redemptions on crypto. What else is the exchange for? Bitcoin sold off 8% on that news. Let's see what Coinbase did. Publicly traded Coinbase, really flat on the day. Initially down. Maybe it's just a Binance problem. Uh, we don't traffic in crypto. We keep a close eye on what's going on with Bitcoin. We check in on Ethereum every once in a while, but failed breakout here. This island top tried to get back above it last week, or sorry, 2 weeks ago, failed. Now we're probing the bottom of the range. Look at the 60-minute chart here. This 16 level got my alert today because we broke back below it. That's not a good sign. So failed breakout, nice rally into when a nice rally. It had been a safe haven when banks were in peril, but not today. If an exchange won't give you your money, not good stuff there. Is that everything? That is everything that we on an inter-asset correlation that we test every day. Here's the tail of the tape now. You can pause it to read everything. I'll hit the highlights. The stochastic on the indexes is now positive on on the RG7 and the five major indexes, meaning they've hooked up on a stochastic standpoint. Obviously, differences in performance, but from a stochastic, which basically has a 14 period look back, how are we performing more recently relative to those 14 periods? And that's what these stochastics show on all the charts that we have. NASI RSI hooked back up on Friday. That's a good sign. This is one of our favorite secondary indicators pointing to health in the overall market. Dollar staying below the 21-day moving average. Good stuff. We're now at the top of the range for yields. Uh, VIX, actually, I did not up this. VIX 16.98, down 1.2%. So we'll keep it at 17%, down 1.2%. Fear and greed. I don't believe I updated this either. Fear and greed unchanged at 59. So we're operating under the bull case with the reclaim of the 21 late last week. I mentioned the Binance. Also, there was a senior loan officer survey that came out and hit the market at 2 p.m., showed credit very much tightening, and initially hit the market, lasted about less than 15, 20 minutes, and we bounced back immediately. Day count from up one with a consolidation day, second day above the ADMA and the 21. Our expectations are positive along with the market action. Stayed in a tight range for the S&P, support resistance pullback held for the NASDAQ 100. Here's the intraday action. Strong sectors. The dollar, oils, cybersecurity, as Zscaler raised their guidance, and that gave a little bit of a boost to the entire cybersecurity sector. PIC, which is base metal miners, ITB, homeowners, continues to be strong. Here's really the key. KRE started off strong, ended up weak. Also on the weak side, real estate and Bitcoin. So in-house, one trade today, we bought Chipotle CMG. We'll take a look at some of the charts of our holdings. Bottom line for the day, very tight consolidation, about a 0.5%, mixed close. KRE remains weak. So let's get to some individual charts right now, and we'll start off with what we bought. We bought CMG. Now, one of the things that we've been using to help time entries is the 60-minute stochastic. So when a chart's healthy and you know you want to get into it and it's consolidating, when it gets oversold on the 60-minute, look for it to hook back up. We didn't get a lot of progress after we did our buy today, but this certainly puts the odds in your favor when you're buying it very oversold and it starts to hook up off the bottom. A couple of other examples of that. Last week, SCCO had a nice move off of its 21. GDX, we bought this. We talked about this last week. Nice move when it bounced off of its 21. So you combine the daily chart resistance, in this case the 21, with the 60-minute stochastic. Even better if it's coming on the daily chart off of oversold also. Even better odds in your favor. But when things are outperforming and then basing, which is very similar to what CMG did, we know it's above, but big monster gap up. We know historically these outperform going forward. Bounced off the ADMA and the 60-minute crossed over, and we pulled pulled the trigger on a 5% position. AMD, last week there was some news that kind of leaked that Microsoft is helping to finance some AI chips, uh, their development of AI chips, and this appears to have some traction, up another 5.8% on 52% average volume. You can see the volume kick in there, and this all happened after a very negative reaction to AMD's earnings report. The news leaked the next day that put in a bottom. At first, we were rejected at the 50 and the 21, closed barely above the 50 and the 21 on Friday. Very strong move to the upside. Let's look at a 15-minute chart here, and you can see just busting above this consolidation area here. This was the high before we did the pullback on earnings. just hanging around on earnings. Very obviously, we had the pop there. Sold off into the close, gap down, immediately bought. Anytime you see this, it's where you put in the lows within the first 5 to 15 minutes and just start trudging higher. That's good news. Regained the 90 area, which was prior resistance. Got back above it and failed early in the day, but then popped back above it. Um, we'll be looking to add to this on any light volume pullbacks. For sure, this looks like it's now the second strongest stock in the semiconductor sector, along with Nvidia, which made new highs. We own both of those. Let's just go through the entire portfolio. ON. And this is in order of size for what we own. ON consolidating Friday's move at a higher high. Did CMG. Lulu continues to just trudge higher along the ADMA, closed right on the ADMA today. Uber acting fantastic after its earnings. In fact, now on day 5, made a new closing high, breaking out of the base. We showed NVIDIA. We own that. DraftKings got a downgrade today, kind of shook it off. Closed near the bottom of its range, but certainly acceptable action after the big move up on earnings on Friday. Uh, Microsoft continues to act well after its earnings. Meta bouncing off the ADMA after its earnings, pulling back after its earnings report. And then we added AMD. We also own GDX. We own TMF, which is a play on rates. They're at the bottom of their range. And we own FAZ, which is short XLF, as XLF failed into the 21 today. So our stop didn't trigger. That's what we own, and that's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. We do active portfolio management here in an effort to keep you out of the way of bear markets. We dodge them down less than half. The indexes were down last year. Indexes down 27.5% at their worst, lagging this year, which is typical when you come off the bottom in a bear market. But for the last 5 days, our leaders have outperformed along with our index ETFs. That's the performance that we're hoping continues. If it doesn't, as always, we've got our stops in place and our downside limited. So with that, as I said, it's not how much you make in the market. It's how much of that you can keep. And I'll wrap up Monday, May 8th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening. Have a great day.